Hello and welcome to the AdTech Heroes podcast. In today's episode, we're going to talk about the SSP landscape, and I'm delighted to be joined by Alex Gardner. Alex is the Chief Revenue Officer of Index Exchange, where he's been for over 11 years. Some of his previous roles include VP Platform Solutions and SVP Partner Development. Hi, Alex. How's it going?
Very, very well. Thank you. Thank you so much for having me also.
It's great to have you on board today, and super excited about the conversation that we'll be having. So to kind of kickstart, really, it'd be great to understand your career. 11 years at one company in AdTech as well. I think it's unheard of, right? So it'd be great to understand kind of your career path, what's got you to where you are today. And maybe even the reason why you stuck it out at Index.
Sure. Thank you for the question. And I realize, AdTech Heroes is a very kind way of representing that someone's been in the industry for a very long time. So I'm feeling a little bit old and exposed, but happy to share a little bit about my journey. 11 years at Index specifically, but previously we were Casali Media, and so there was a rebrand there. So that 11 is closer to 20.
Wow.
Which only sort of further emphasizes the point you're making around a rather unusual trajectory, specifically in ad tech. But it's been one heck of a journey, to say the least. My career broadly is sort of, cut in two halves. There is my life at Index and formerly Casali, and my life before that. And very quickly, I did have experience prior to ad tech in financial services at a mutual fund company. And after that, I spent a couple of years at the Toronto Stock Exchange. And I could have never anticipated the degree to which my experience in financial services, and specifically the Toronto Stock Exchange, would parallel some of the experiences I've had today. But it's been an incredible ride, to say the least. I've seen all of the sort of trials and tribulations of the industry from a very kind of unique perch. And I think there's been these interesting cycles that have characterized the kind of time that I've spent in ad tech, which I think is interesting to call out, whether it was the early days of the ad network or the early advent of real-time bidding that subsequently kind of morphed into more broadly programmatic, to where we are today, and sort of the maturity and the maturation of the industry and everything that comes with that around regulation relating to privacy, the overall sort of volume of spend that's transitioned into the space, let alone kind of these emerging channels around streaming, et cetera. It's been a really, really incredible ride. I'm happy to dive into any of those dimensions. It's hard to summarize nearly 20 years in a quick sort of couple of minutes, but a really, really incredible perch. And I think part of what has made that so unique is Index's position within the ecosystem. It's not something that we tend to talk a whole lot about, but we are a wholly owned, privately held business with no external investors apart from the founders themselves. And why I call that out is because there's never been the influence exerted on us as an organization in the way that it sometimes is across our peer set. And so we've had this freedom or this liberty to act in a manner that I think has been what we believe to be in the best interest of our customers, in the best interest of those whom we serve. And so we've kind of blazed our own trail. Add to that the fact that we're located here in Toronto, this sort of Canadian underdog, if you will. There's these sort of elements that have contributed towards what for me has been a really, really interesting ride.
And that's the basis of your culture, right? Like you just mentioned now, you could be looked at as the underdogs from Canada. It's similar to CTAG, where we're the underdogs from Spain, right? So a lot of people within the industry probably would discount that. So yeah, totally can relate to being the underdog in the room. And ad tech in itself, right? You said 20 years experience. It's an area where it's constantly changing. So you might not necessarily need to change your role to mix things up every year, right? There's always the year of the mobile, always the year of video, or now, the year of AI, or maybe the next 10 years will be the decade of AI. So it's always...
You're absolutely, I'm sorry to cut you off. You're absolutely correct. It has never been boring. Part of the reason that I think I've always been so compelled to stick around and to really, continue to invest my time and effort is that the opportunities that have presented themselves over that long arc have been incredibly motivating and interesting. And, we sort of cited a couple of them, but every single day, there is a new challenge and correspondingly new opportunity to really test myself. And what I think is so fascinating about the industry that we occupy, we exist in, is that the path has not necessarily been determined. If you're, a believer in the potential, and you've got a strong will or desire to, create value, and you've got some skills and some capabilities, that formula creates the potential for I think enterprising individuals to really accomplish exciting, interesting things. And that's certainly been, my experience. We've got an incredible visionary CEO. We've got an incredible leadership team, and we've got an organization from engineering to product to services that really understand, I think, what it is that we believe we're able to accomplish. And you bring all that together, as I said, and we've blazed our own trail. And here we are, 20 plus years later, still fighting the good fight. There's never a dull moment. There's never the sort of like lean back and we arrived, we made it, because the industry is constantly evolving. And that, I think, fundamentally is the reality, the nature of technology and innovation is that sort of like opportunity to continually drive forward.
And in this, you mentioned the ever-changing landscape. How does the CRO of one of the biggest SSPs, one of the biggest ad tech companies out there, plan his day? How are you planning your day? Every single day of the week.
Sure. I mean, my responsibility broadly is to ensure that we are able to harness the power and the possibilities of the cool things that our platform is capable of. But perhaps to simplify that, I'm motivated by growth. That is my prime responsibility. And so I have to consider how we can ensure that all of the resources that we have at our disposal are appropriately aligned to that objective. And it really starts with clarifying the objectives specifically. What are our goals? And those goals are, determined at a very high sort of corporate level, but they all cascade down into the various kind of departments and functions across the organization. And so if we do a really, really good job at establishing those goals and objectives and then cascading them down, as I mentioned, we're in a point where then everyone has the clear sort of sights as to what it is they're accountable for. And so often, my days are assessing, where we're standing relative to those goals. So at the highest level, how are we doing on ad spend? How are we doing relative to last year, relative to our stretch goals, relative to budget, ensuring that those are all pacing in a manner that we expect. But of course, ad spend itself is a lagging indicator. And so for someone who's focused on growth, I need to ensure that everything that we're doing ahead of ad spend, all of our leading indicators are contributing towards what will ultimately manifest in future ad spend. And so it's working with the teams, ensuring that they understand their goals and objectives. How are they doing relative to those expectations? And if, which is often the case, we are confronted with a challenge that maybe compromises our ability to achieve our goal, what are we doing in order to address that? How do we overcome? How do we circumvent? And that could be a product solve, that can be a commercial solve, it can be a talent solve. And so assessing all of that literally on a daily basis. And, what's interesting, and perhaps one of the silver linings that occurred over the pandemic, is we spent a lot of time looking inwardly. And I think we established a lot of, new precedents in how we work. Certainly that's consistent across, all industries. But for Index in particular, I think we got a little bit tighter, a little bit more closely attuned to one another. And so the process of kind of calibrating relative to those goals and those objectives, I think got a little better. And so I come into my day, I'll look at the numbers, obviously reading all the trades, making sure that I'm up to speed on all the latest goings on in the space. But then the day largely consists of connecting with customers, connecting with internal staff, and calibrating as always relative to those objectives.
And as the digital age and the pandemic and everything around that made it easier to connect with your your teams around the world? Because, we can just jump on a video call now, can't we? Very, very easily, or, maybe less so a phone call. No one really likes using the phone in our industry, but, jumping on a video call, has that made it all a lot more easier for you to stay
Um,
connected?
it has. It has. The benefit was that we all adapted incredibly well. And I don't think, apart from the broader sort of like economic climate, I don't think we lost any ground. In fact, during the pandemic, we endeavored as an organization to undertake a massive rewrite of our entire exchange. This was an incredibly ambitious project, one that would have been difficult if we were all in the same room together, let alone distributed, in our homes across the world. And we accomplished what we had set out to in terms of rewriting, as I said, the entire code base for the exchange. A huge, monumental, maybe one of the biggest projects we've ever undertaken as an organization, and we did it all remotely. And so I think we proved to ourselves what we were capable of accomplishing in more challenging circumstances. That being said, I am a huge, huge proponent of in-person, and I am eager and advocating for the pendulum to swing back. From the start of this year, CES, through the dozens of events that we've had, I feel completely re-energized and reinvigorated through in-person interactions. And if nothing else, I'm also sort of, I guess, I'm seeing the validation and the benefit that comes from in-person that I think is the intangibles, if you will, that are so hard to capture through video, through calls. So while we did an incredible job and we made it through, I would love to see more in person, more, and that's internally, that's water cooler talk, that's passing each other in the hallways, and all of the intangible values that come from that, in addition to customer interactions. We're just a couple of weeks out from Cannes as maybe the epitome of some of those interactions, and I couldn't be more excited to reconnect and re-engage with all the folks that we'll be meeting out there.
Yeah, I think we've missed it, haven't we? For 2 years, we missed.
We're human beings.
Human beings. We need to interact, right? We need to speak
Indeed.
to communicate with people, and ultimately, that's how we're helping brands, right? If you look at the crux of it, we want to help brands and tell stories and build narratives, and that's the business that we're in. And you can't do that, unfortunately, with just technology and without that human relationship.
Absolutely.
I totally agree with you. In your opinion, in terms of the SSP landscape, it'd be great to get an understanding of your opinions around the SSP landscape and what that looks like right now.
I frankly think that the SSP landscape has never looked more interesting than it does today for a whole bunch of reasons. Certainly the challenges that we face have never been more complex, which creates fertile ground for opportunity, no question. But on the other hand, we're also battling these perceptions around the death of the SSP, which, as we know, is probably somewhat overrepresented in the media and the trades.
And that's been going on for some time, right? I remember those conversations maybe 6-7 years ago, and you guys are still here.
We're still here. We're still going, and most importantly, I think we're still creating value for the ecosystem. I think that the trades can sometimes latch on to maybe somewhat salacious or those headlines that will generate the clicks, if you will. And I don't fault them for it, but I think it may mischaracterize or represent the reality of the circumstances, which is that our businesses are doing very strong, and the reason that is because we are, as I mentioned, still creating value, still solving a need, solving a challenge. In the ecosystem, and I don't think that is going away anytime soon. The circumstances I think that are often pointed to, whether it's Yahoo's SSP or EMX, are very distinct and unique circumstances, and by no means representative of a broader trend. And so I think that's one interesting dimension, but we can probably dismiss that one. And then certainly there's the perhaps much more interesting and meaningful activity, if you will, in the space where some SSPs are now, crossing the chasm, if you will, over to the demand side in a much more sort of meaningful and intentional way, which I think is incredibly interesting. If for no other reason, it allows us to reassert our position in the ecosystem. And I think for some time, it's been difficult for customers, stakeholders to differentiate amongst exchanges. And I think some of the changes that are now surfacing provide that ability in a much more clear, and much more certain terms. I'm speaking, of course, of Clearline as the example where Magnite will be facilitating, demand on behalf of buyers directly. And I think that that's interesting. And if that's the strategy that they want to pursue, I wish them the best. We feel that our responsibility has never really changed, and that's to be 100% accountable to the media owner, the media seller. And we will continue to do that until we feel as though that opportunity is fully exhausted. And I don't think that's going to happen anytime soon. Look no further than what's happening with the cookie and deprecation and the responsibility we have to ensure that media sellers can effectively navigate that space. There is this sort of healthy tension that exists between buy and sell. I think operating on both sides of that equation inherently compromises the experience for both, which is why we're going to hold fast, as we always have, on our sort of sell side slant.
And it's interesting you mentioned the relationships. So how are the relationships with other SSPs in the market? Do you invite the CRO of Magnite for lunch? Do you have coffee with the CRO of OpenX or some of the other players out there? How is that dynamic?
It's I think we all really thrive on competition, and we really thrive on the sport of business, if you will. And I would say it's all within a positive and I won't say collaborative tone, but certainly a positive tone. I think they're all great people. I think they're all really smart, capable individuals. And at the end of the day, I will always want to ensure that I can best them in any opportunity that I'm afforded. But at the same time, I think there's interesting circumstances where we can, whether it's not collaboration, but at the very least align on what we believe are relevant topics that support the mutual interests of our customers. And in those circumstances, we absolutely talk.
Yeah, and that could be around topics like sustainability, carbon footprint, ethics,
great example,
diversity, right? So definitely, I think there is room for, like you said, collaboration is probably the wrong word.
Right.
Education and just cooperation is probably the
cooperation. What's
yeah.
the term? Not to get too sort of MBA consultant, but co-opetition. I think there's no shortage of those circumstances. We all play it close to the vest, but we also see each other dozens and dozens of times a year, and this is a small industry at the end of the day. And so I think there's always a really positive relationship between all of us.
Definitely. And how about the DSP to SSP relationship? I'm guessing that's a lot more fruitful, with a lot more positive and more collaborative as well.
Yeah, no, absolutely. I mean, we made probably one of our most strategic acquisitions, certainly our largest. It was late last year, a company in Germany that we acquired by the name of River. The rationale for that acquisition was to accelerate efforts and development that was already underway internally around machine learning, the focus of which was to help improve the outcomes for our DSPs. As you might imagine, they are heavily focused on core KPIs, including win rates, obviously the cost of the inventory, and ensuring ultimately that they are getting access to the right impression for their given bid. And so that's one example as to how we are investing to help improve the experience they have in buying on our exchange. And there's been a lot of discussion in the space, apart from the conversation we just touched on around some of the SSPs that are sort of crossing over into demand. We've obviously gotten a version of that from the demand side with Trade Desk moving into the supply side, if you will, with OpenPath. The headline is that our relationships with DSPs have never been better. And we continue to grow with them. As I said, we've invested in ways to help improve what it is that they receive from us in an effort to maximize the value of their core KPIs. And that's an effort that never ends. And it further underscores the importance of the human element in everything that we do. If we were to leave the machines to their own devices, I think it would be a slow sort of demise over time. And so we really have to have people that are actively engaged in pursuing growth and development and alignment. What's relevant to one DSP may not always be the most important, aspect or detail to another DSP. And so understanding all of those, intricate details by DSP, by buyer seat, by individual buyer, really digging in across all of that has certainly bared fruit for us, and it's something that we'll continue to do.
Definitely. And how does the death of the third party cookie affect all of this? How are you guys planning on your side, and how have you been planning? Because I know Google keeps changing their goalposts back, but I'm guessing you have put a bit of time and investment into that strategy.
Yeah, it's an important question. Our journey in relation to third-party cookies really started well before any discussion surfaced around Chrome and Chrome deprecation of the third-party cookie. It goes back to early walled garden discussions and recognizing that the gardens were capturing a disproportionate amount of ad spend because they had a trick that the open web didn't, which was authenticated users. And so we recognized way back then the opportunity for people-based marketing. We don't hear a whole lot about that anymore, but and so we invested way back when. Unfortunately, the industry didn't move quite as quickly as we thought it would, and it took a catalyst event like the formal deprecation of third-party cookies in Chrome to really kind of accelerate that. Now, I say accelerate because it's taken some time, as you've mentioned. The can has been kicked down the road for what feels like many years now. We think, early, I think first half 2024 is likely the target date. I don't suspect that we'll get it kicked down the road any further. Ultimately, this is a very good thing for the industry. We recognize that it's an incredible hurdle and there is risk and there will be pain, but it is a necessary outcome. The cookies are brittle. They were never the best representation of how to effectively target. They, carried us this far, but it's time to pass the torch. I think it's going to be somewhat of a GDPR moment, if you will, where in spite of, seeing it coming from miles and miles away, I think a lot of folks still have their head in the sand. I think a lot of folks are reluctant to make the changes ahead of, actual deprecation, although it'll be rolled out over a period of time. Our responsibility is to ultimately ensure that we are educating, informing, and supporting in a way that minimizes the downside impact and certainly maximizes upside potential. But I think we have to be honest about the likely immediate impact, which will hopefully be followed with a rapid improvement. And so how do we kind of shrink the depth and amplitude of that negative impact so that we can get on the road to improvement? And I think at the end of the day, it's a portfolio approach for us where it's never going to be one, identifier. It's going to be multiple. And our, again, responsibility is to ensure that we support it. It's being effectively received and passed to the buyer, and the buyer's in a position to action it. We have to understand what the buyer's interests are in terms of which specific signals they want to key off of in which circumstances. There are a variety out there today. We want to encourage publishers to start adopting as soon as possible. And that is where we sort of play as facilitator, ensuring that that there is minimal impact, as I said, and that everything is transacted open and transparently and clearly as possible, so that we can ensure a smooth transition. But it's going to take time. It's going to take time. This is not going to be a few months. This is going to be a likely multi-year scenario as we navigate the transition.
And are you guiding these publishers and the clients of yours in the alternatives? And I'm guessing some publishers are thinking about it more than others. How is that looking? And does it differ geo to geo as well?
It does. The short answer is yes to all of those questions. There are publishers who have an incredible asset in first-party data that they're able to leverage. And so how do we ensure that is, again, being appropriately leveraged? And, there's these third-party graph providers and there's these third-party identifiers. And we need to be talking to all of them. We need to understand their businesses intimately. We need to ensure that they adhere to the standards and the requirements and the regulations to which we are accountable. to which our publishers are accountable. And so there's a heavy vetting process. Some publishers are taking advantage today, and we applaud them for that, and they are seeing the benefits of that. The challenge is that buyers in many respects will lead the charge here, as is often the case. And so understanding what the buyers are ultimately, preferring or preferential towards will have a really important bearing. And that's starting to emerge more and more. Obviously, Trade Desk is putting a huge amount of effort into their ID, and we've seen, continued development from them. And so obviously that's an important one that we support. But it's a tapestry of participants and of stakeholders, all of whom need to work together in unison, all of whom need to be communicating in order to support this transition. And so we mentioned co-opetition before. There is no better sort of example of that than what's happening as we move through this really pivotal change in the industry. And we're right at the forefront of that.
Definitely. And you mentioned in terms of human interactions, they're as important as ever, right? As they have ever been. But what else are you looking forward to in our industry throughout, the rest of the year?
Well, so many things. I think I remain incredibly optimistic about the second half. There is so much uncertainty that persists in the world today, let alone in our industry. And so it's hard to anticipate what next week is going to look like, let alone the second half of this year, let alone, 24 and beyond. We have to be conscious of costs. We have to be conscious of strategy and investments, of course, but I don't think we slow down. I think we have to remain laser focused. And if nothing else, these circumstances have certainly helped us to become more focused on ensuring that the things that we do choose to pursue are indeed the most important for our customers. And so I am cautiously optimistic about the near future of the economy at large and the implications of what that means for our spaces. We all know programmatic, given the kind of control and functionality, tends to be the first thing that gets turned down when there is uncertainty. Correspondingly, it's the first thing that gets turned back on when circumstances improve. And I think we're already starting to see signals of that. And so in some respects, programmatic becomes perhaps even a leading indicator for the broader advertising ecosystem. I'm excited for that. You mentioned in person. I'm very excited for that. We've got really incredible momentum around streaming and CTV. And I'm really excited for what the second half brings in regards to that channel in particular and beyond. We've made huge investments and we've had incredible progress and momentum. And so that channel in particular is something I'm incredibly bullish on. It's no secret. I think video is certainly the star of the ecosystem today. And that is absolutely true within our organization. We've made great technical strides, whether it's advocating for 2.6 and the incredible advancements that affords. Of course, the new protocol I'm referring to, advancements around podding and all of the technical sort of nuance and capabilities that are baked into some of the advancements that we're really striving and pushing for within CTV. And so that sort of as a whole is something I'm particularly excited about. I'm excited for Index to start hosting more events. I'm coming back to in-person again. We sort of put a bit of a pause on that for a period, and I think that's something that I'm certainly looking forward to. And it can be very intimate. It can be something with a small group of people through to the very large events that we hosted previous to the pandemic. Those are a couple of things, but I would say broadly, there is a lot to be excited about in our ecosystem, and we're leaning in heavily with all of our customers and partners to drive value again for them as we move through this kind of post-pandemic reality.
Amazing, thank you. We usually finish our podcast episode with this question, so I'd love to get your take on it. So if you had a superpower in AdTech, what would it be?
Sure. Well, I have a superpower. My superpower is that I whether I like it or not, I never forget a face. So that is my super. I'm horrible with names, but I never forget a face.
I'll hold you to that if I see you in
You
Cannes.
can hold me to it. You can hold me to it. It's cliche and it seems obvious. I would love to be able to see into the future. I think there are so many incredible things that are happening right now. I would be remiss if I were not to mention, AI. Where does that go? How does that play out? Whether, in relation to our space, where I think there's an incredible number of opportunities, or certainly beyond that, in relation to humanity, if you will. What happens with the metaverse? We just saw the launch, I think it was yesterday, the Vision Pro. Like, does that
Yeah.
land? Do people actually start walking around wearing these things? I just think there's so many incredible things that are happening right now. And, the kid in me doesn't want to wait to see where the story sort of progresses on all these. And so I would love to see further into the future. From a kind of financial reporting standpoint, I would love to be able to see into the future there too. I'd love to be able to know exactly what the trajectory of, programmatic ad spend is in our space. It may seem like a silly desire, but, getting a little bit of a window into that, I think would be incredible.
Amazing. Okay, I think that's all we've got time for in today's episode. Thank you, Alex, for your time. It's been great speaking to you.
Thank you so much. I appreciate it.